Icehouse Venture's Seed Fund 3, which still has 3 months until its official close, will already go down as the fastest and largest seed raise in the firm's history, with $35 million secured in just 4 months. Joining me now is Icehouse Venture's CEO, Robbie Paul. Welcome, Robbie.
Good to be here.
So who's come forward to put money into the fund?
A lot of investors, mostly Kiwi-based high net worths and family offices. About half of the capital are from investors who were in our earlier funds, and then the other half are new believers. So,
why do you think this one's been so popular?
Well, I mean, the reality is that when you build trust with investors over a 7-year period, it does get easier to raise capital in subsequent rounds, especially if you do what you say you were going to do. And that we feel like that's what we've done for the last 7 years across 70 companies. And then I believe that the market is increasingly aware of the opportunity and are aligned to the mission of finding and supporting great Kiwi startups. And so that would potentially contribute to the growth of new investors in the space.
So a bit more people tying into the mission really behind it.
Certainly. Yeah, our community has grown by about 1,000 investors since we launched that first fund on 6 continents, all either Kiwis or sort of honorary Kiwis, if you will. But there are more believers than there used to be in backing Kiwi startups.
We've heard news out of the US that investors, particularly out of Silicon Valley, are pulling out of supporting tech investments at the moment because of geopolitical uncertainties and the economic conditions. Why do you think it's different in New Zealand?
Well, I'm not sure it will remain different for long. We can see certainly some of our late-stage companies having to adjust expectations around timeframes to raise capital, around valuations, and around round sizes. The reality is, though, that there is a long sort of accordion effect where listed stocks may take a hit, then pre-IPO stocks, and then on you go to very early-stage companies. And so late-stage are ones that will potentially feel changes sooner and in more profound ways. Early-stage companies are just so decoupled from the sort of near-term macroeconomic conditions, and their success is decoupled from it. And so most people are still willing to say, no, if you're high pedigree, if you have ambition to become huge, and if you have some sort of tech or intellectual property that serves as a foundation to become large, then we're willing to give you $1 million or $2 million to pursue that.
Does that mean you're tightening up on your follow-on capital then or not?
We have to be careful at all times. And the good news with all of our funds, I mean, we have no arbitrary timelines to deploy capital. There's no economic incentive to invest quickly or slowly. And so that means we don't have to react to near-term challenges or changes with how we invest. The other thing that is not unique to us, but to a lot of investors, is that we tend not to go it alone. We, in most cases, represent between 30% and 50% of a capital raise. And that's important because if one of the companies that's going well and merits more support comes back to raise capital, you're not the only check that can potentially support that.
Are valuations starting to pull back, though? Are entrepreneurs having to be a bit more realistic?
Well, I'm not sure. I think at late stages there are a few examples, but really it's a question to ask in sort of 12 months because it's such a lag indicator. The reality is that any company that raised in Q3 or Q4 of last year probably raised enough money to see them through 12 to 18 months based on that plan, which could be adjusted. So that would say at least half the market of companies that would send the signals to be able to inform that view have not raised capital and may try not to over the next quarter or so. So I would say let's look in a year.
So in terms of Seed Fund 3, are you keeping it open, and does that mean you'll invest in more companies or have more to invest in the 30 or so companies you had earmarked?
It's a combination. In terms of the fundraising timeframe, that remains the same, which is a few more months to close it out. We haven't found ourselves in this position before to say we've hit our target and we have time. So there are still a number of investors who have expressed interest and will probably come in and will grow the amount of capital that we have to invest. Whether or not we invest in more companies or more in the same number of companies is a decision we have to make along the way, sort of not upfront. But fundamentally, the difference between the difference of millions of dollars doesn't materially change the strategy or the dynamics of that fund.
And have you started investing yet? Or?
Yeah, we have 2 companies, both stealth. Looking forward to telling you about both of them. And all I can say is they're both in clean tech, not necessarily by design, and they both certainly meet the the spirit of this fund, which is to find very high pedigree entrepreneurs exploiting either research or unique perspectives that they have on the market. And one's in Wellington, one's in Christchurch, and we will announce it as soon as they're ready. So,
what sort of returns have your earlier seed funds delivered? How does that stack up for investors in this one?
They're going well, but of course the performance of those funds are not linked to the potential performance of this. Usually the performance of venture capital is reliant on you being able to successfully find and invest in and support a few companies out of an entire portfolio that become absolutely immense. And so if you look in the first fund, we backed 30 companies between December 2015 and December 2019. 4 companies have sold and delivered positive returns. 2 companies have failed. And that leaves a number of companies that are still operating and still there to potentially define the returns of that company. The good news is that in that portfolio, there's the likes of Halter, where we were the first investors, the likes of Sharesies, where we were in the earliest round, Parrot Analytics and Tradeify and Mint Innovation and Dawn Aerospace. So some companies that are really emerging now that people could have been cynical of back then and have proven themselves to have very large businesses, like millions in revenue in some cases and hundreds of employees and global competitiveness.
Is there too much early stage capital available now in New Zealand? Is it really competitive now to back these companies?
I mean, the good news for entrepreneurs is the market has definitely matured and grown, and there's been a number of new entrants and some very capable and experienced entrants from offshore. And so that's the great news. I just can't see an argument that there's too much capital, and that's because I sort of sit in this world of opportunity where entrepreneurs you think you found them all. And certainly when we invested in 53 new companies last year and we did 72 follow-on rounds, you'd think you've covered it, and we haven't come close, right? So there are always new entrepreneurs emerging, and increasingly they're emerging from under the wings of really great entrepreneurs like Rod Drury or Peter Beck, where they have built experience and perspectives and ambition and say, hey, I want to build something too. And so that sort of family tree in New Zealand is what will command significant capital over time. And
you've got entrepreneurs who've had a successful exit but too young to retire and give it a second crack, don't they? So.
Absolutely. About half the companies in the second fund were led by founders who had built and sold companies previously. That is about double the fund prior to that.
I just wanted to turn to an opinion piece NBR recently ran from a University of Auckland academic, Stephen Corber. Now, he said they'd interviewed a number of entrepreneurs who said they thought the skills, capabilities and behaviour of investors here were subpar. What's your take on that in terms of the behaviour of investors here?
Well, I mean, if there's somebody that has a view, my view is that I've co-invested with pretty much every investor in this country, of which there are dozens, and you see the spectrum of spectacular behavior and unacceptable behavior, right? So to the point about the skills and the experiences, that I just don't think that's supported by the most promising companies that have grown over the last decade or so. If you look at First AML, who has the benefit of Chris Heaslip, who built PushPay, or Halter, or Foundry Lab, who have Peter Beck on the other end of the line, or Mint Innovation, or Avertana, who can call Sean Simpson, right? And the list goes on and on and on. The reality is that very high pedigree companies can attract the talent they need. It has nothing to do with whether they're based here or on the South Island or in Antarctica. And so it's not easy to attract the attention of the people who have those capabilities. But if you have the pedigree, you will attract them.
You recently launched a code of conduct, though, and also an anonymous reporting platform. So do you think that obviously there wasn't an issue to address?
Yeah, we certainly wanted to give people a voice when it was obvious when we hired Lane, who had been a founder, that there wasn't that opportunity. And I think the dynamic of a small market is that if you have, if you've been mistreated and you want to talk about it, you risk putting yourself in a precarious position with this very tight-knit community. And so that was why we put that platform in place. I think the last time we talked, I said there hasn't been sort of like hair-raising number of reports, nor have the nature of reports been ultra concerning. But it's important to put that out there and to make sure that people who don't have as much of a voice have the voice.
And so, have you had others join the platform as well? Because it would be helpful, I guess, if if there's a complaint about another company, for example, that they could deal with it. Have you others want to join in?
Yeah, we've had a number of conversations with folks. So we do want to make it sure that they can make those decisions sort of on their time frame. We're not pressuring them,
Sure.
but there's definitely interest, and I'd say more parties will either announce it or just roll it out.
Have the complaints turned up anything that surprised you?
Not really, right? I think I think in any industry there are going to be bad actors over a certain time frame, and obviously we want to do what we can to squash them or hold them accountable. But no, there's not sort of a specific type of bias that would surprise the common person or action that is particularly concerning.
Okay. All right. Well, thanks for your time, Robbie Paul.
Yeah, thanks very much.